Good morning and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec Markets, on Monday the 8th of July. Now, we've had a pretty interesting move on Friday from the non-farm payrolls report. We had that surprisingly positive, strong data for the jobs growth that really did help the dollar to rebound on Friday. A sharp move to the upside on the dollar, trade weighted on Friday. That coupled with the move that we saw rebounding on treasury yields. And generally speaking, the dollar pretty much gained ground across the board. And what we've seen is a sharp move lower on euro dollar, cable lower, dollar yen was higher, gold was much lower, and equity markets started to come off. Now, this is all sort of in keeping with the expectations that had previously been held, the fact that the Fed was set to decisively cut interest rates, maybe even as much as 50 basis points in the July meeting. Now, those expectations have had to be repriced. And subsequently, we've seen the dollar gaining ground on that. Now, a little bit of consolidation today on those moves. Nothing too significant in terms of any unwinding, but cable a little bit higher. The Kiwi also a little bit higher. But generally speaking, that rebound on gold, for example, is something to maybe keep an eye on. I'd say 1400 is still a key level on gold, and I'll talk about the technical implications of that in a bit on the chart analysis videos. But it's interesting that we saw the S&P 500 on Friday, for example, rebounding actually into the close. But again, we've seen futures a little bit lower today by about 0.2%, and that's sort of dragged on European equities a little bit today. But it's an interesting angle, the fact that we may well see some profit taking drifting in to these equity markets. For example, this week we've got Jerome Powell speaking at the congressional testimony. That's going to be important, looking for any clues on monetary policy there. Also, the inflation data later on Thursday for the CPI is going to be seen as important. But for now, a little bit of a quiet session with regards to the fact that there isn't any economic data due today, nothing really of any note anyway, and we're sort of a little bit of a wait and see mode I think we've got today. Now, we've got the chart of the day, which is silver. Now, as I said, gold sharply lower on Friday, silver also sharply lower and really decisively breaking that recovery trend. You've also seen a move below a pivot line at 1510. Now, interestingly, that this morning that pivot line has pretty much come in as a basis of resistance, and the market is just struggling around that pivot line now. So anything there or thereabouts around 1510, if that fails on a resistance, I think that would be an interesting point, because you've got these momentum indicators which are rolling over. Look at that crossover bear signal on the MACD lines. You've got the acceleration lower on the stochastics, following from a bit of a bear kiss lower, and also the fact that we've got the RSI again up around that 50 mark, but 50 is seen as a bit of a pivot, and breaking below that on Friday sort of confirmed also that the move towards a more corrective outlook. So if this 1510 mark remains in place as a pivot resistance, I can see that the silver price is possibly going to be rolling over, and that could give an indication also of where gold may be going. But certainly you've got that Friday's low support at 1485, interestingly around 1490. If I zoom out, you can see the importance of 1490. 1490 was that old breakout level that became supportive, and a bit of a medium-term pivot line. So 1490 area, again, a basis of support. So you've got 1490 to 1510, a couple of levels to really look out for there. So that's where we've seen the silver rebounding today, but will that rebound start to falter again around 1510 area? So with that in mind, I wish you good luck in your trading today, and I will speak to you again later.